We have Kritika back with us to fill us in on that deal. Kritika?
Hi, Nigel. So it's official now. SoftBank, Snapdeal have called off the deal with Flipkart. The decision has been taken by Snapdeal. Its largest shareholder, SoftBank, has supported that decision. Now, I'll get to why that decision has happened in just a bit, but essentially the statement says that they are pursuing an independent strategy. They are pursuing a strategy of Snapdeal 2.0, wherein they will be independently going ahead and trying to revive the company. They are going to be selling non-core assets independently, and I would assume that would include some of their subsidiaries, and they are going to try to function as an independent company. This is huge news, not just Flipkart. There were talks of, at one time, talks of Paytm. There was talk of Infibeam. Flipkart had emerged as frontrunner. We've been chasing the story from day one, and yes, the deal has been called off. Now, what was the bone of contention? We have been reporting for quite some time now that Snapdeal founders were unhappy with the deal. If you remember, when we had reported that the board has called off the deal, we had also picked up that there was a split. The board had actually cleared the deal, Snapdeal's board, but there was a split there. Snapdeal's founders had rejected it. So with the founders not being on board, minority shareholders being against it, it seems like the founders have convinced the individual investors and indicated that they want to pull off the deal. What happens now? We will perhaps see independent non-core assets being sold off by Snapdeal. We need clarity on SoftBank side, if at all SoftBank will go ahead and invest that additional amount that they were looking at in Flipkart. But not much of a loss for Flipkart. But if you talk to analysts, Snapdeal has been trying to revive the company for the last 2.5 years. The question is, what did they not do at that point that they can do now?
Okay, all right, Kritika, thanks very much for that. So that's the big update which is really coming in from the e-commerce world. But interestingly, Bank of Maharashtra has reported its 6th consecutive quarter of a net loss for them this time, and the numbers are looking very dismal for that one. It's a net loss of 412 crores. But what really takes the cake is the gross NPA loan ratio, which has gone to around, I think it's gone to over 18% this time. So that compares to around 16.93% on a sequential basis. So you can see that the stock is really reacting to a net loss, to an NII which is down in double digits, plus an asset quality which has worsened considerably on a sequential basis, at least in terms of percentage as well as in terms of the absolute figure for the gross NPA. The net NPA is flattish on a Q-on-Q basis, so that would be a little bit of a silver lining. Maybe we can pull up the gross NPA on an absolute basis as well. 18.59% versus 16.93%, but the absolute figure should come up for you as well in terms of the Bank of Maharashtra gross NPAs. So interesting. Let's see in terms of what the slippages might be, but it's a 6th quarter of a loss for that particular bank. We need to take a break, but we'll focus on some more stocks once we're back. Stay tuned.
ये 8 नंबर है.
All right, welcome back then. As we speak, some downtick is what we're seeing from the high point of the day on the frontliners. VGuard comes out with a set of numbers, absolutely flat on the top line. So that's
Steep
not very good
decline
news.
on the profit.
On the profit, I think the profit number should come up for you as well. That's a sharp downtick that we're seeing, and that's an operational miss, mind you, because the EBITDA, that's the operational profit, has come down by close to around 50%. And that explains why the stock is down close to around 6% from the high point of the day. So just keep an eye out on that sort of numbers. No growth on the top line. You have your operating profit that comes in lower by around 50%. And obviously, the net profit has close to have halved on a year-on-year basis as well. That stock comes in for some big selling pressure. But let's move on then. We have Bhavi, who writes to us from Mumbai. She holds 7,000 shares of JSW Steel at around 210 for the past 10 days. Medium-term investor wants to know whether to hold or to sell. First on the charts, Prakash, how's it looking? JSW Steel comes out with a set of numbers tomorrow. It's been the best steel performing stock, really.
Well, I like the structure. It's seen a good up move. It's given a generator buy somewhere closer to 100 and not given a sell as yet. It's still into buy zone. We could see sideways action, and the pattern that I'm emerging in the last couple of months is more of a running correction pattern. It tells me that there is much more upside here. Continue holding it, I would say that, and stop. If you want to have a stop below 205. Who knows where it goes?
Okay, well, we have some statements which are coming in from VGuard actually. What they have mentioned is that GST-related temporary destocking by trade has led to a drop in volumes and consequent drop in margins. There's been an increase in raw material costs as well, and delayed price increases in the market has also adversely impacted the margins. GST-related one-off expenses and startup costs of the Sikkim factory has also impacted the bottom line. So it's been a multitude of factors which has really impacted their numbers this quarter. And like you can see, down around 6 to 7 odd percent, like Nigel was pointing out, for VGuard this time.
All right, take that. I just wanted to point out Tirumolai Chemicals. That stock, in fact, is running along as we speak. It's spiked up to the high point of the day. So I think that stock should come up for you. Let's pull up the intraday chart there. Tirumolai Chemicals is up close to around 14%. And the other stock, the street is taking note of is Ultramarine. Just pull up the intraday chart over there as well. Suddenly that stock is moving higher. Tirumolai has been a big outperformer. Naveen was telling us that, in fact, that company came out with a good set of numbers. But the other stock we're talking about is Ultramarine. So let's pull up the intraday chart over there. You'll see that one is spiking up. The market capitalization is roughly around 600 crores or thereabouts. It has 20% stake in Tirumolai, and that translates to more than 250 crores. So the short point being why this one is buzzing is because it's coming from the same group entity.
Yeah.
And in fact, obviously you'll have to take discounting into place. But the market capitalization, the holding in Tirumolai Chemicals is nearly around 40% of its current market capitalization. And that's why that stock has been moving in tandem as well. You pull up a last 1 year chart of Tirumolai, you pull up a last 1 year chart of Ultramarine as well. You'll see that both those two stocks have been spiking along as we speak. And as we speak now, Tirumolai virtually at the high point of the day. But I think we can slip into that snappy break maybe. And we'll come back. We'll continue our focus on a whole host of stocks and answer some queries.
Welcome back. Well, we do have Anisha here with us to talk about the V-Guard numbers, which are actually looking quite dismal. The stock is down 7%. Anisha?
Oh, well, yes. It's an all-round disappointment. The top line has grown just around 1.5%, and the margins are real disappointment. Came in at around 5% level versus 11% last year. I was looking through the segments as well, and both the segments, electricals and electronics, have not done well. If you look at the electronics segment, the margin have come down to 10% versus 15% reported last year. And even if you look at the employee cost, now that has jumped up by 35%. Now, Ekta, one can argue that the margins are down because of the GST destocking, etc. But why would your employee cost suddenly go up by 35%? Even if you look at the other expenses, that one has gone up by around 21-22%, and that is again hurting the margins, and that's why we are seeing the bottom line plummeting by around 40-50% to come down at just around 23 crore level versus 43 crore reported last year. Now, if you look at the stock, that is not cheap at all by any standard. It has run up around 58-60% this year itself. That has been the stock did well initially in the initial part of the year, but in the last half it hasn't been doing that well. Given that GST impact was to come through, I remember having a word with the management earlier as well, who said that GST will be impacting the numbers and the fact that the margins will be under pressure, but this kind of margin depletion was really not expected, and that's why the stock is down in trade today.
Okay, all right, Anisha, thanks very much for that. Well, on that note, we're going to wrap up the show, but do remember to keep sending us your stock queries, posting it on our Money Control message board. Stay tuned. Closing bell will take you through the last hour of the first day of trade this week.
Asian markets, they have opened up more or less lower early this morning after geopolitical tensions in the Korean Peninsula.
Demonetization. Now, those deposits have been flowing out quite rapidly, actually. So to that extent, there is a pressure on our rates right now.
So the liquidity dynamics has been good. But on top of that, I think a rate cut would only create a longer-term expectation that maybe this liquidity is going to stay, and therefore India is going to be in a softer interest rate environment.
Friday's low of 9944.5 is a sacrosanct stop loss for the bulls, and the market leadership is firmly and squarely with the HDFC twins.
At this stage, we are very clearly focused on getting an IPO out as quickly as possible.
10,000, 10,100. I think even a lot of bullish voices might have started talking about the prospect of a correction.
Markets have opened, and I only want to check the Larsen stock because the numbers were so good. Yes, 2.26.
At some point we will see this correction. Unfortunately, there doesn't seem to be a big trigger that's happening.
Real interest rate being so high, there was no choice for the bank but to bring down the savings bank interest rate.
2,100 airplanes in the next 20 years worth 290 billion. Quite excited to announce that today.
Markets are up about 35 odd points at 10,052.
Okay, so once again, the bulls in complete control of this market. This is closing bell. I am Anuj, and with me is Surabhi. Hi, Surabhi. Good afternoon.
Good afternoon, Anuj. When things go right, they just go right? There's this one pocket of the market we always would talk about that is a bit of an underperformer, not as smart as the private sector banks. But then SBI statement coming out and changing all that today?
Yeah, I think the SBI news is really big, and I think that's really led to this, once again, this move. I mean, the market don't really need good news right now, Surabhi. This market has been climbing on bad news. So, you throw good news and the bulls would cherish. So SBI alone should see 500 crores of delivery buying, Surabhi, today. More than that, I don't know when, you're okay if you see delivery buying of, 500, 600 crores in HDFC Bank, Yes Bank. For SBI to see this kind of number today, I think would tell you that, maybe that pocket is also starting to do well. Also, ICICI Bank is doing well, Larsen is doing well, ONGC is doing well. So the market, auto stocks ahead of sales numbers are doing well, the iShares, the Marutis of the world. So everything is going good for the market. Only caveat is that, and we discussed this on Friday as well, that as of now it's not impacting, but the market breadth has not been strong.
Yeah.
Today also the rally is narrow.
Yeah.
The mid-cap index is underperforming, but the large caps have underperformed so much that you may be going through that phase where a lot of money is moving into large caps, and that's why the market breadth is a problem. Now, you look at Balrampur Chini's numbers, the numbers are good, but maybe the street had factored in a lot more. You look at V-Guard's numbers, I think the market clearly was a bit disappointed. So the room for error on mid-cap side is slightly low compared to the large caps, but honestly, the large cap action today has been just breathtaking, especially on some of these banks like SBI. Overall, I think you don't need me to tell you that the bulls are in complete control and every dip is being bought right now.
Exactly what's happening. All right, on that note, let's get you the top market headlines this Monday afternoon. In a historic move, State Bank of India cuts savings rate to 3.5% on bank deposits. SBI says huge outflows from savings accounts post demonetization put pressure on the cost of funds. The street expects other banks to follow suit. The Nifty Bank touches fresh records. Steady day of trade. The Nifty trends above 10,050. The Sensex adds over 150 points. Banks lead the charge while mid-caps underperform today. Metal stocks like Tata Steel, Vedanta, NMDC rally on the back of a big surge in global prices. Iron ore prices hit a 4-month high. Steel and copper prices surged to multi-year highs as well. Pharma stocks under pressure this Monday. A Credit Suisse report says Sun Pharma's injectable sales have halved from last quarter, pegs the cuts in the sales of Dr. Reddy's and Lupin as well.
Okay, how should you position yourself in this last hour of trade? Ashwini Gujral and Mitesh Thakkar now join us with closing strategies. Good afternoon to both of you. As we speak, by the way, Sundaram Fasteners numbers also flashing on the screen. That set of stocks has also done well. But Ashwini, your thoughts on the day so far? It's been a strong day, especially for the Bank Nifty, up another 1%. How would you take the index from here and your stock calls?
The index remains in an uptrend, particularly the banks are in a very strong momentum. What I've seen is that 2 or 3 banks tend to, take the onus upon themselves, and they don't let the Bank Nifty come off quite a lot. So possibly a lot of the thunder of RBI has been stolen by SBI. So overall, just keep buying the dips. That works. But it's not across the board. I mean, you just can't buy anything and expect it to move up. ICICI Prudential, in my opinion, has bottomed out. So today is a good day to buy that. Also, Reliance and Maruti Suzuki, Infosys, a lot of strong stocks are holding the market. So there isn't really any great deal of worry that 10,000 will get taken out on the downside in any kind of fashion. As far as individual stocks are concerned, NMDC is a buy with a stop of 124, target of 136. JSPL is a buy with a stop of 150, target of 164. And ONGC is also now getting ready for a bit of a rally. So that is a buy with a stop of 166, target of 178.
Okay, by the way, the stock that's really getting excited right now is Infibeam. Maybe we can pull up the intraday. It's up 6%. A big surge has come in now that we know that the Flipkart-Snapdeal merger is not on. Maybe people are getting excited all over again. Though I think, Anuj, the management did clarify that they're not, really going after this. But I guess F&O stocks or some fun and games going on Infibeam. Yeah,
it could be happening, Surabhi. I think this stock has really been unscathed by whatever has been thrown at it. So it looks like maybe it's in strong hands, Surabhi. So, unfair on my part to comment more than that because, honestly, I haven't studied this too much. So. But yeah, it's up 6.5%. So that's all we can say right now.
Okay, all right. Mitesh, let's get in your thoughts on today's market action as well and the strategies that you're working with now in the last hour.
Yeah, good afternoon. So, I did say that we will possibly get into 9950, 10,100 kind of range, and we will hit possibly the upper end of the range. So I think we are moving towards that. Maybe around 10,100, which was the recent high, you will see some kind of supply and profit booking re-emerge. For the time being, we're still trading with long bias, and the calls that I have right now are both on the buy side. JSW Steel is a buy above 221, and I would buy then with a stop at 216.5 for targets of 230, 233. And CESC is a buy. It was a buy earlier as well, but now can be bought afresh with a stop at 932 for targets of 980.
Okay, SP Tulsian of sptulsian.com is also with us, along with Mayuresh Joshi. Good afternoon, gentlemen. Mr. Tulsian, first, your thoughts on State Bank of India and the numbers or the rate cut that we have had. Do you think it can lead to a bit of a re-rating from here on? It's one of your favorite stocks, of course, SBI.
Yes, Anuj, I think this is a massive re-rating move having initiated by the bank. And probably apart from SBI, in fact, we have been keeping the positive stance on the larger PSU banks, followed by SBI, PNB, and I think this move is going to get followed by the other banks also. So if you really see in fact, one can, quietly say that the margin expansion of 50 basis point has happened to these banks, or maybe on a net basis also, if you take about 20 basis point also on an increase. And maybe one should wait for the Reserve Bank of India outcome, and post that the whole scenario is seen to be having a vast re-rating for these PSU banks. In fact, now in PSUs, you have become two classes, maybe 1, 10, 11 banks below the line, or in terms of the sizes of the lower pyramid of the bottom, and the upper ones like SBI, PNB, Bank of India, Bank of Baroda. So they all will get vastly re-rated, and second round of re-rating probably will start once the SR Rosneft deal will get the permission from PMO, or maybe the final permission from the government, and that will really be seen a big trigger, because if you really see 84,000 crore deal, 65,000 crore will be coming to the banks. Major beneficiary and recipient will be all these PSU bank, and from there the ball will start rolling on the NPA resolution front also. So yes, in isolation, this SB Savings Bank interest rate cut off by 50 basis points below 1 crore deposits, because I don't think that anyone can have a balance of more than 1 crore in SB deposits, which will be entitled for 4%. So practically this 50 basis point cut applies across the board for all the savings bank account, and that will be seen quite positive, extremely positive, because State Bank of India, after the merger of this all these 5 associate banks, have a deposit of 16, 17, 18 lakhs crore. And even if you have a CASA deposits, take the situation, or maybe the savings bank deposits, I think that will give the huge advantage. So yes, a step in the right direction, vast re-rating, and probably this will continue for SBI as well as for other banks.
Okay, mid caps and small caps obviously swaying to the earnings beat, and we can see that on a controlled print. Completely different. They had a 45% EBITDA jump, and the stock is getting so excited. And V-Guard, the stock that Anuj was just talking about, had a 45% EBITDA drop, and then therefore the reaction on that stock. So going as per earnings beats today. We've also got Mayuresh Joshi joining into the conversation. Mayuresh, the other big boy that's obviously helped the market's case today is L&T. What did you think of the numbers, and would you advise a buy?
Afternoon, Surbhi. Yes, I think I was after the numbers on your channel itself. And again, I think the impressive growth, specifically on the infrastructure side in terms of order inflows, will hold good for L&T going forward as well. There have won huge orders over the past few years, specifically on the domestic infrastructure business, and the domestic E&C execution has been pretty good. Though I think you might have seen some blips happening in terms of some past orders probably having the margins being curtailed to a tad bit. But the other segments probably have risen up to the occasion as well. You look at heavy engineering, for example, so the EBITDA margins there have risen by 1% to 16%. Electric and automation have improved to 10.3%. You've got hydrocarbons, which has shown the maximum increase because of the legacy orders not being there in the system at all. The only glitch again will be the developmental projects. So the Hyderabad Metro is a little bit slow, and the NABA receivables have not got recognized. But having said that, I think the street was largely of the consensus that because of a lower tax rate, the bottom line growth would have got buoyed, and that is precisely the case. But the management sticking on to their guidance of a 12 to 14% order inflow growth and a 12% revenue growth. I think that augurs well for a stock like L&T sitting on an order book in excess of 2,62,000 odd crores. So yes, I think remain positive on the stock, and yes, any decline becomes a good buying opportunity for a long-term investor.
Okay, Mr. Tulsian, thoughts on a couple of stocks which came out with numbers. V-Guard, where the stock's down about, I think, 6% at the last count I checked. And also on Balrampur Chini, Mr. Tulsian, your prima facie comments on seeing the numbers?
So, first coming on V-Guard, numbers are definitely quite disappointing, and in fact we have been keeping always the cautious view, maybe because of the concerns on the quality of the financials having posted, plus the expensive valuations seen in the sector. So both these factors are, I think, making the stocks to correct, and rightly so. Coming on Balrampur Chini, excellent numbers. I don't think that one should really look for the EBITDA margin kind of things, because if you really take a call on their two sectors, one is sugar and second is distillery, both have really performed quite well, and the right comparison will be YOY. If I just give you on sugar, the sugar EBIT has come at 140 crore against 103 crore of the same quarter previous year. Cogen had shown a EBIT of 27 crore against 21 crore. And mind it that Cogen is going to perform quite well in Q2 as well, because the crushing has continued till end of April. Distillery has shown a mild disappointment by 20% fall in EBIT with a bit of about 35 crore against 43 crore, and that was already known in the management commentary because of the prices having reduced in the ethanol prices, and the incentives having given in last year to the company of 5 rupees per litre having withdrawn. So I think on both the core operations, firstly on sugar, and in fact one has to read or wait for the commentary for the management, that in our estimates company was having 67 lakh bags of sugar available for sale in FY18, and I think looking to the volume of about 1100 crore of sugar sales in this quarter, it seems that they must have sold about 28-29 lakhs of bags of sugar. So still they are left with about 37-38 lakh bags of sugar, and one can imagine with the rising price, better realization in Q2, what kind of profitability can be expected in Q2. So excellent numbers, though optically we may see that net profit has risen only from 110 crore to 120 crore, but the core sector sugar has performed exceedingly well, and I think the same trend is going to be seen from the other UP-based sugar mills as well for Q1.
Okay, all right. On that note, we have to take our first break on Closing Bell. Our Closing Bell money control question of the day is, will SBI's savings rate cut lead to a re-rating of the stock? Log on to moneycontrol.com, post your responses, and of course, we will read out some of the most interesting ones after 3:30.
Okay, not just that, stay with us as we take up your queries coming in live from Twitter on stocks, sectors, and lot more.